Hi, it's Nick Plamenak from Yellow Brick Road, Spring Hill. Recently, there have been a number of changes that have been brought in for investment lending to curtail the rising house prices in areas like Sydney. Today, we're going to discuss some of those changes and help you understand what you can do to best position yourself for the future. The two biggest changes that we've seen with investment lending are, firstly, there's been an increase in interest rates for investment loans. And secondly, we have a number of lenders who are not lending to as high a loan value ratio as they used to, where they used to lend to 90%, a number are capping out at 80%. Firstly, the interest rate changes. CBA, Macquarie and ANZ have announced a 0.27% increase on investment loans. National Australia Bank have announced a 0.29% increase. And Suncorp have reduced discounts for investment and interest-only lending. So what does this mean? Assuming a 0.27% increase for investment property with all costs borrowed, example A, for a house in Sydney where the median house price is $1 million, the additional cost to hold the property will be $2,700 per year, or $51.92 per week. However, for a house in Brisbane with a median price of $490,000, the difference will be $1,323 per year, or $25.40 per week. The second of these big changes has been a change to the loan to value ratio that some of the lenders will lend to on investment properties. Some of these examples include St George and Westpac have capped investment loan lending at 80% of the property value. ING Direct have capped investment lending at 80% of the property value in New South Wales, but have retained their 90% lend in areas like Queensland. What impact are these changes going to make on the property market? Firstly, we do see that there will be a reduction in investment lending in Sydney. Secondly, probably a minimal impact to the owner-occupied part of the market, as there aren't really many big changes in this part. And finally, well, in Brisbane, and looking at the local market, probably not really much of a change, because Brisbane has an average house price of less than half of Sydney, and the unit price is also much less, so we don't see as big of an impact. Hope you found this session informative. If you'd like to discuss your circumstances and how these changes impact on your portfolio, please call us on the number listed below. Thank you for joining us.